Good afternoon, good evening to our audiences around the world. Welcome back to the Washington Outsider. For those newly joining the show, my name is Irina Tsukerman. I'm the editor-in-chief of the Washington Outsider. Today we have an interesting but controversial topic of cryptocurrency. In the audience, we have many of those who've been following cryptocurrency, blockchain technology closely, who are traders, investors, and so forth. But we also have people who may not be familiar with it beyond what they hear in the media and of course, while everything that you read on the internet may be true, sometimes it can also be misunderstood. With us today, we have two distinguished speakers. Unfortunately, our third speaker, Tomer Aharonovich from Israel, was unable to join us, but hopefully he'll be able to participate in future discussions on this very important topic. Mr. Saeed Aldarmaki, he hails from UAE. He's a CEO of Alphabit, founder of Sheesha Finance. He has a great deal of experience in the financial sector, and he will discuss the strategy related to cryptocurrency, avoiding scams, what is successful, and what he has seen and observed and learned from his experience in the financial sector. Mr. Todd White is a policy expert. He is the founder of the American Blockchain Pact in the United States, an organization that strives to educate legislatures about blockchain technology and cryptocurrency. We will hear from him about the newest developments in the US policy format, the challenges facing blockchain and cryptocurrency as a matter of innovation, and the efforts to overcome these arguments on the policy high level in the regulatory framework in the US and elsewhere. After each speaker makes his comments, we will go into the question and answer part of the discussion, which I'm sure is going to be very dynamic and interesting. With that, I'm actually going to start with Mr. Aldarmaki. I look forward to hearing from you both.
Thank you, Irina. Thank you for having us on the show. It's always very interesting for me to talk about my experiences and what's been happening in the blockchain and crypto space, which I've been very heavily focused on in the last 5 years. Before that, I used to work for Abu Dhabi Investment Authority, which is one of the largest global sovereign wealth funds. I was mainly looking at fixed income and treasury instruments. So I went from the lowest risk asset class to the highest risk asset class overnight 5 years ago. And since then, I co-founded a regulated crypto fund, which is regulated by the Dubai Financial Services Authority. That's been running for the last 5 years. And the mandate or the strategy of that fund was, and still is, investing early stage into projects that are related to cryptocurrencies. And we do that through a very rigorous and selective selection method of which projects to invest in. But about 13 months ago, I launched my own decentralized finance platform, which is disrupting that actual business model. Sheesha Finance is a decentralized fund or decentralized incubator and accelerator, and it's disrupting the traditional VC model. Because with this current DeFi platform, what we're doing is we're allowing people to be able to participate or get access to a diversified early stage crypto portfolio through the token that we've issued, which is Sheesha token. And that's actively trading at the moment. It has been doing so for the last 13 months. And the business model is to try and help people who are new to the space or people who are too busy to have a crypto portfolio or invest in crypto by being the entity that does the rigorous research, analysis, due diligence into a lot of upcoming new crypto projects across different use cases, across different blockchains. And if you're new to the space, then it can be very overwhelming and time consuming and have a lot of effort and to find the trusted sources of information before you actually make investment decisions. So I've come from a traditional finance background and then focused on investing in the crypto asset class. And for me, cryptocurrency is one of the use cases of blockchain technology. There's other very useful use cases and important use cases for blockchain technology, but cryptocurrency was the first use case, and the aim of Bitcoin or cryptocurrency originally was to actually decentralize the monetary system and to kind of disrupt the traditional fiat system. And it addresses a lot of the issues that come about with a global reserve currency or the traditional fiat currency system. On your point of avoiding scams or avoiding projects which are, they don't really have a value or they don't really solve a problem, the best way you can kind of lower your risk of getting involved with a project that's a scam is by doing a lot of research and reading and actually trying to even speak to the entrepreneurs or the founders behind the project and do as much reading as you can and ask as many questions as you possibly can before deciding if it's something that's right for you or not. Obviously, that process is something that we're doing as a professional company, and that is we're making the assessment on these projects. So, we very much reduced that risk of getting involved in projects which have no value. And we always look at the long term, and we try to educate our community into, having investments for the long term and making informed decisions when doing so. Thank you.
Thank you so much. I'll be back with more specific questions about all of that. Right now, I give the floor to Mr. Todd White, who will actually give us a brief explanation of what blockchain technology is, what the actual process of mining is, and then explain about the regulatory framework and the challenges in the U.S. policy world.
Well, first of all, thank you very much, Irina, for having the distinct pleasure of joining your platform. And a little bit about me, I have been in the blockchain cryptocurrency space as a regulatory professional, moreover running a government affairs firm, which is Rulon and White Governance Strategies. And as you so befittingly stated, I am the founder of the American Blockchain Pact, which educates agency officials, regulators, and the American Blockchain Pact does other action steps here in the United States, such as supporting incumbents with political contributions, and secondarily candidates that we had deemed transformative in the general elections and not necessarily the primary elections to draw a distinction. And our third metric, which is kind of further out, zooming out here, and is to henceforth consider a third political party, which I won't go into detail as to why, but Generation X and Y and Z are as we go into this technocratic society, where there's more of an impetus on changing the regulatory landscape to kind of mirror what we're about to embark upon, albeit the constraints that we're seeing currently with regard to innovation among our members of Congress, our executive side of our government administration, and also our regulators. My firm, Rulon and White Governance Strategies, began in the crypto blockchain, as I began to cite, in 2014. And at that time, being the first Washington, D.C. based government affairs firm to explore the idea of addressing namely Bitcoin, because at that time it was kind of deemed by the US government, as the word implies, crypto, clandestine. And what we were trying to do is to try to have the CFTC, Mr. Chris Giancarlo's office, to take another look at Bitcoin and look at it as a commodity at that period of time. But fast forwarding, what we also tried to do during that time, there were a lot of what we call ICOs during this window, for which are now verboten, which for your listeners, what they were is a form of crowdfunding called an initial coin offering. And there was no AML, KYC protections for consumers who were participating in these type of fundraisings, which ended up sometimes there were some criminal illicit money that was going into coins that were in these fundraisings during that time. So what we did is those companies or crypto startups, what we would do is we would shepherd these companies who wanted to do it the right way through Regulation A and D through the SEC. And we worked with law firms, and we did this for about 2 or 3 years until the SEC just kind of put the kibosh on this structure here in the United States. So then I'm kind of morphed into being a regulatory speaker around the country on talking about cryptocurrencies. This was still the early days. And then on or about 2016, 2017, there begun a shift to Congress to do something about cryptocurrencies. And I have worked on every piece of legislation leading up to the Investment Infrastructure Jobs Act to try to kind of squash language that was antithetical to the innovation of cryptocurrencies. So on the blockchain side, you may, or your listeners have probably heard in the airwaves, perhaps not, all of the unique patents that are being approved by many Fortune 500 companies and those companies outside of the United States as well, adopting blockchain technologies, a digital ledger system. And that is kind of the pathway of what we're seeing right now. So that's my introduction. And I think that with regard to the regulatory issues of the day, there are it's a very crooked road.
Thank you for that. I will definitely get to that in a bit, but my first question is to Mr. Aldarmaki about what he mentioned earlier, asking questions and figuring out what projects are going to be successful in the long term. We are talking about a fairly new landscape with the digital assets, with new technologies, with new forms of digital assets being claimed by different companies all the time. Are there any specific signs or tells whether something is off to a good start or whether it's most likely going to collapse shortly thereafter?
Yeah, I mean, see, the more kind of the more involved you are and the more experienced you are with assessing investment decisions or actually making investments in general. I know not a lot of people are experienced in that process, but you know, myself, if I just quickly look over a pitch deck and a white paper of a specific crypto project, I would within 5 minutes kind of get a feel for the project and kind of have a high level assessment of it. But you also need to go into the finer details and speak to the actual people behind the project and so on. And if you, for example, see that the people and the entrepreneurs behind the project are not communicative, or they don't want to kind of reveal who they are, for instance, that's a kind of a red flag. And there are common red flags out there that you can look out for and that you can be aware of. But for somebody new to the space of investing in general, let alone cryptocurrencies, it's a steep learning curve, because you have to go through the trial and errors, and you're most likely going to do mistakes and make the wrong decisions more often than not in the beginning of the process. But as you get more experience and as you learn from things that have happened in the past, then you can make a more informed decision. But it's very subjective. It's very high risk. And I know Todd mentioned the ICO kind of era where people were making a lot of promises and referring to a white paper or a piece of paper or a document, and not having a minimum viable product or something to show for investors. And a lot of people are putting a lot of money into these kind of projects and ultimately losing a lot of money, because there wasn't the kind of innovation that we have nowadays compared to 2017, 2018, which was the ICO era. A lot more sophisticated investors are in the market right now, in the cryptocurrency market. A lot more talent is coming into the industry. A lot more innovations happening in the industry. So the quality of projects that you see nowadays are much higher than they used to be, but that doesn't mean that there is still a risk. Even if you invest in a project and you think it's really good and you think it has a good potential, 9 times out of 10, the success rate of a startup, let alone a crypto startup, is very low. So you have to understand what you're getting yourself into, and you have to kind of be ready for that, and have the many conversations that need to happen. If you're going to put in a significant amount of money, then you really need to do all your homework and your research and make sure it's the right investment for you, whatever asset class it is, but especially in a high risk asset class like cryptocurrencies.
It's funny that you mentioned that, because at times some of the commentators on this topic tend to not draw the line between fluctuations in the market value and outright scams. One example of this commentary was the recent drop in price over a particular iconic NFT, which resulted in basically a lot of people saying that all of these high value NFTs that generated hundreds of thousands and sometimes not even for millions of dollars were really not, worthless as investments. How do you make the distinction?
Yeah, I mean, that's a good question. If you're talking specifically about NFTs, for people that are not kind of very familiar with NFTs, it stands for non-fungible token. And in essence, what an NFT is, it's a digital, it gives digital ownership of any kind of asset, whether it's an art collection, or whether it's a real world kind of music instrument, or whether it's real assets out there, and tokenizing it and putting it onto an NFT. So the question with NFTs is the actual asset that this NFT is linked to, is that actually worth the value that you're going to be putting into it? And is that value going to go up over time? So the actual asset behind this NFT needs to have either utility or value or actual demand for that kind of asset, and the demand has to exceed the supply for the price to go up, or for the investment to be of value in the future. So there's distinction here between what the NFT is representing, and if you know what it's representing, and if you are somebody who's experienced in that asset in the real world or not in the digital world, then you know that it's going to have value in the digital world, because tokenizing an asset brings about a lot of efficiencies. So if the asset in essence is something that you think will have value and will be in demand, then that's your assessment. But if there's something that happens to the actual technology, or if the if what they're saying this NFT is backed by isn't actually existing, then yes, then it will be worthless from the start.
So in other words, just because some people or even a lot of people are making a wrong assessment of a particular token does not make the whole concept a scam.
Sure. Yeah, I mean, a scam, like technically what a scam is if a party or an entity raises money from people and makes promises on delivery of a product or service and does not deliver a product or service and actually runs off with the proceeds, which are supposed to be used to be invested into creating a product or service. If those funds are actually not at all being used for the purpose they were raised for, then that's the definition of a scam. But
well, I'd like to qualify that, because what Mr. Aldarmaki just articulated is absolutely right. Let's zoom out on that statement that he cites. Ripple, for example, that was investigated by the Department of Justice and is still, this is what they did. They didn't go through the regulatory process. They kind of formed the organization or Ripple on the precepts of, and I want to be mindful of your viewers here, of not going through the regulatory, again, process and raising money, and that money was not used in a proper way. Now, not to say that it was a scam, but it was formed on the wrong platform of using the regulatory compliance rules. So there is a distinction here, but at the same time, it would technically be determined that it was a very illegal structure. And this is what we're faced with in the United States and abroad. Are these illegal structures. We have DAOs, we have all these different, not sanctioned by the government. So they could thereto be described as the same thing. So we really have to really focus on differential definitions here. And this is what one of the paucities I've found working with Congress is that there's no mutuality in definitions, which the DOJ is really working on. And in fact, yesterday just put out a 58-page paper talking about the challenges arising from international investigations and crimes related to digital assets. I'll put a period there, but I just wanted to, I thought it was a very good point to clarify because of how this ethos is evolving.
It sounds like what you just mentioned could be an entire field of study by itself, especially considering that not only are there difficulties in definition within the US, but internationally, there are completely different frameworks with respect to this technology, ranging from outright bans to, in very rare cases, adaptation of cryptocurrencies as official currencies. So even for basic concepts, there's a stark difference, much less for fraud-related definitions and activities. Speaking of confusion and challenges, we are also seeing another phenomenon, which is that Congress sometimes lumps together the concept of blockchain technology and cryptocurrency as a financial commodity or asset. Could you please clarify for the audiences who may be no less confused than Congress, the difference? What is blockchain technology? What is the process of, what is the technical side of this issue, and what is the financial aspect, and why are legislators unable or unwilling to distinguish between the two and sometimes try to ban both?
I would happy to kind of begin what a brief definition of blockchain is. And basically what it is a transparent, decentralized way of recording transactions. And it could be both financial and non-financial. And it's a distributed database that records a public ledger on all transactions and digital events or executed and shared by participants. That would be I think, a simple definition. And to answer your question, you're correct. American legislators are still trying to get their hands around the delineation between cryptocurrencies and blockchain. And that blockchain is the railroad which virtual assets operate on. That's the best way that I've come to in the early days, kind of describing what the differential components are of both. And by the way, we're very blessed to have the co-founder of blockchain that sits on the American Blockchain Pact board. And that's the one thing that we want him to do is to go before Congress finally and have a very educational discussion with the Committee on Financial Services. But reluctantly, the committee at large has decided that they want to bring in corporations rather than the real pioneers and the architects of some of these novel startups, and to talk about what blockchain is. And that would be, I think, a very, very useful opportunity for those who would our country. It would serve the Committee on Financial Services and some of the senior ranking members who have kind of stumbled publicly in delineating crypto from blockchain. And I think we would fast track a lot of thoughts that we all need to galvanize on, and where we need to take legislation.
I'm not sure why Congress is unwilling to have both. One would think that a diversity of perspective, having a mixture of corporate interests and these pioneers, would be of interest to both the legislators and to the American people watching them. But that raises all sorts of questions about financial interests in the Financial Services Committee, and who they are really answering to if they are not willing to consider these different perspectives. But I'll get back to that point of financial conflicts of interest. For now, I wanted to come back to Mr. Aldarmaki and mention that in addition to his previously mentioned ventures, he is also part of Jahani and Associates, which is an investment bank. And quite interestingly, this is an investment bank that is at the forefront of blockchain, at the forefront of being open to cryptocurrency. I'm curious how that came about, why this openness when most of the financial institutions, particularly operating in the US, are still fairly conservative, and how did you manage to break through some of these challenges in confronting traditional financial institutions?
Yeah, great question. So I think when you're in the financial services industry, if you're facing a technology which has a use case which is disrupting that industry, then you'll always be very cautious in dealing with that technology and very apprehensive in embracing that technology. But actually, blockchain as a technology has clear benefits and efficiencies to specifically the financial services industry. It is applied in other industries, but the most disruption that is happening from using blockchain technology is possible in the financial services industry. So, the traditional kind of long-term players in the financial services industry, they have the bigger corporations, they have a big market share in this industry. So on one side, they don't want to lose out that market share, but on the flip side, if they're not adopting a disruptive technology, then gradually over time, they'll be overtaken. And that's something they need to understand too. But in the short term, maybe there'll be pain because not everybody is embracing of change. Changes brings fear into people, and people don't like change, especially if they've been in the habit of doing things a certain way for a long period of time. And with the financial services industry, the legacy system in that industry is, the technology that's being used in the legacy system in this industry is very inefficient, highly inefficient. There's a lot of middlemen, a lot of middle entities that are interacting or brokering a deal, and that's extremely inefficient. So using blockchain technology removes that friction, but at the same time, the powers to be in the financial services industry don't necessarily want to lose out on, especially if they're in the intermediary or kind of middleman area of the business, they don't want to miss out on that. So most people are kind of reluctant to embrace a disruptive technology and go through change that comes about with digital transformation and so on. But for me, if an entity like Jahani and Associates is open to change and open to utilizing or investing or brokering deals in the fintech industry and specifically in blockchain technology, then it's something that I'm supportive of, and I'm always supportive of anything related to blockchain technology. And for me, it's rare that you find entities that want to kind of embrace a technology, but the number of participants or the number of enterprises and corporations that are using blockchain technology now is dramatically increased and will continue to do so. And don't forget, blockchain technology is still a very novel technology. It's still in its development phase. I think if people think that blockchain technology and the different use cases on blockchain technology are at a level where it would make things extremely efficient and actually make it a no-brainer for corporations to use blockchain technology, then they'd be mistaken, because the technology has a long way to go yet, and it still has a lot of kind of questions that are asked on the regulatory side. So why would a large corporation use a technology when it's not even clear if it's encouraged by the government or the financial services regulator to use that technology? So there's still a lot of question marks, and that's why it's difficult. But I think if you take a chance and you take a risk, then the higher the risk you take, the higher the potential rewards.
And in that respect, do you think being at the forefront of this technology that some people find risky precisely because of its high privacy guarantee in some respects in transactions, do you think it has given you a competitive advantage in various parts of the world vis-a-vis more traditional financial institutions?
Yeah, I mean, with blockchain technology, you can use blockchain technology in a permissioned environment where you control the data, and you control who can see the data or who can manipulate the data or who can transfer the data in the database. It's still a distributed ledger, but it's authorized by specific parties, and that's a permissioned instance. And that is what enterprises and corporations prefer to use because they maintain control of the system. But then you have the likes of a permissionless blockchain technology network, which is like Bitcoin and Ethereum, where the public has access to the information, and there's no way of changing that information or manipulating the data within the distributed database. So, there is a way that corporations and enterprises can use blockchain technology in a way that suits them. But then if they do it that way, they lose the benefits of utilizing the technology in a permissionless manner, which is open to everyone and accessible to everyone and so on. So that's the distinction there. But ultimately, again, even if you're an enterprise or a corporation and you want to use blockchain technology and you can use it in a permissioned way, then you still have to be open to connecting that blockchain technology with your legacy system and kind of going through the pain of testing that technology and making sure it ties in and works with your existing database, which is not on a blockchain network. So there's those two different things to consider.
And speaking of difficulties and going back to the legislative and regulatory frameworks in the United States, we have seen a variety of different responses from outright advocates who embrace these innovative technologies and believe that market will correct and regulate itself, to others ranging from professors whom we're discussing before this program, to legislators who are outright trying to completely ban all of that. And my question is about the legislative and executive response to all of that. What has been the regulation landscape thus far? What is the actual approach? Does the discussion of the potential digital dollar have anything to do with that? And what happened to President Biden's executive order related to the regulatory system? Has it had much impact, and if so, how?
Yes, I think this is an excellent compound question.
Yes, sorry for lumping all of that. It's there's a lot to discuss.
I can connect all dots. First and foremost, with the regulation status of where we are, following the Investment Infrastructure Jobs Act, and as we kind of evolved into the Biden EO, the executive order, what the provisions were in the executive order is that there is a 6 to 9 month study group that is put in place within the regulatory agencies, including Treasury, to try to determine some form of framework or make certain regulations there to make recommendations to Congress. So that's kind of still working its way out, and we've had some communications with the OSTG, or the Science Technology group. They're a little closed mouth on active participation. That's the one thing that we're flummoxed on, because this should be a private-public cooperation by all means. But to advance your point, as it pertains to why we believe legislation has been slowed down. Now, granted that this is a very replicating ethos, okay, domestically and worldwide. As soon as you think you have your finger on the pulse of regulation here, it morphs into NFTs, as I alluded to earlier, DAOs. So now what we believe, if you kind of zoom out and you look at the playing field, I'm a chess player. I think that what the U.S. government would prefer to do, and is putting its resources to achieve, is that they want to put in place and evolve the CBDC. And for your listeners, it's a central bank digital currency, or otherwise the reverb is digital dollar. So they want to advance the digital dollar to be able to put in a regulatory framework first around this metric or measure. And then they're also, by the way, anecdotally, they're working with the MIT lab. They're working with a branch of the Federal Reserve Bank out in the New York. I think it's the Boston Federal Reserve Bank that is taking much of the lead on this, including the emerging technologies of the Department of Treasury. But they're so far out from perfecting what needs to happen. It's just going to, in my view, and many others, they're just going to just furlough the challenges that we have pursuant to innovation. So those are some of the pieces that aren't really fitting in the order that we see. And the first point I raised, this should be a public-private cooperation, like in other countries, like I think the UK and certain parts of the European Union began to do. And I think that we would have a frictionless process. And I think both sides of of this issue would kind of come together. There would be a sense of understanding on, again, the term differential definitions, and everything would kind of merge in and in a more unified way, and we would be able to advance all parts of legislation, have some fundamental reasoning in certainly advancing the digital dollar, because we know that China and other countries are therefore doing the same. So that would be my underpinning value set to the government if they would, inject, the smart people that are prepared to work with the agencies. And I drew out an entire diagram. I did a very unique presentation in January 28th at the National Press Club with a former chairman, Ways and Means chairman, Jim Moran. And I diagrammed what that should look like. And that was very, very well respected, but it just kind of stopped there when you try to present those ideas to the White House. They're not ready to make that step. And it would be a very important step that we need to make. And I think the agencies there too would appreciate it.
Correct me if I'm wrong, but China's digital currency project is not merely a self-contained venture to modernize, but there is a concern among the regulators in the US that it's an effort to displace the dollar as the basis in the financial transactions around the world.
Correct.
How would the digital currency in the US offset that phenomenon, given the rate of inflation in the US due to overspending? And why is cryptocurrency perceived as a threat to whatever that effort is supposed to be?
Well, I would love to take a stab on it, and I gotta pull out my economics degree here a little bit, but I'll keep it simple, and my policy background, and my former securities license background as well. Gotta put them all together here. So what the fomenting issue is, we have a debt problem here in the United States. I think that's heir apparent, to which we have nearly $30 trillion of debt. We have nearly $150 trillion of unfunded liability. And we are also currently still, we're in I think almost our 100th year being the world reserve currency. And we are the makeup of the largest percentage of the IMF basket of currencies. And there are many countries moving away from the dollar. These dollars are coming back. And concurrently, we have wars and we have issues with supply and demand. And I should kind of describe the battles as geopolitical challenges. So we have inflationary pressures all over the world. So to now put the layer of digital currencies and people migrate to digital currencies, we need to make sure that that doesn't throw our financial system out of whack. I mean, we have a bond market, we have a derivatives market. There's so many different components of the American system. So if everyone, or let's say a greater percentage of those who morphed into digital currencies, that would kind of misalign our financial system. And there's concern there. And then the digital currencies that one would divert to would be another question mark. So it would just create a corollary of disruptions. I perceive the regulators and members of Congress that I've also spoken with privately or within the SEC, this is what their view is. We're just not ready to take this step within where we are concurrently.
Well, while Congress molds these dilemmas and tries to catch up to these developments, the world is moving forward. And with that, I want to kind of shift gears a little bit and discuss a bit of the international context and what role it's playing in these fair respect to Mr. Aldarmaki, UAE has been actually at the forefront of innovation in this respect, not just with the crypto adaptation, but also AI and other matters. Despite the challenges of innovative breakthroughs, it nevertheless has pushed forward to this on these fronts. One of the things that I've been hearing about is potentially a joint cryptocurrency with other countries. Is there any truth to the rumors, or are there any other developments such as digital currency that are also being discussed?
Yeah, great point and great question. So the UAE is a very young country. It's a developing economy, and the rulers of the UAE have been always very visionary. They first started the vision or the creation of the United Arab Emirates by being very smart and diligent with the proceeds of the oil and gas reserves, and as a resource, oil is valuable. And 50 years ago, when the country was created, there were several entities or bodies that were put in place to actually preserve the wealth of the current generation for the future. And Abu Dhabi Investment Authority is one of those entities which, the excess funds the government was getting from oil and gas every year, they would be investing it across all different asset classes for the future. And 50 years on, Abu Dhabi Investment Authority is one of the largest global sovereign wealth funds and has a huge amount of assets under management and is creating a very stable rate of return on that investment that was made a long time ago. And the rulers of the UAE also know that any economy, so if you're familiar with economics, there's different factors that affect the rate of growth of your economy. But if you're embracing emerging technologies, then that's actually an accelerator factor in terms of growing the economy. So they've always been very embracive of disruptive and emerging technologies, and blockchain is one of those technologies that the UAE government is embracing. And there is a distinction here in the UAE between blockchain technology and cryptocurrencies as a use case of blockchain technology. And that distinction is also visible with the regulator and the central bank, and they identify the different areas within cryptocurrency and the different areas and use cases within blockchain technology. So now, as cryptocurrency or virtual assets or digital assets, there's a regulator in place which is overseeing the regulation around this evolving technology, and they are both embracing blockchain technology. However, on the cryptocurrency side, the actual regulation is very conservative and very cautious and wants to protect consumers that actually are involved in the cryptocurrency market. So I think the UAE government and the regulators in the financial industry have done a good job in kind of identifying what is the difference between blockchain and cryptocurrencies or digital assets and how they can regulate one and the other and still be embracive of the technology, but also control the kind of financial aspect of the technology too. So it just falls in with the way the country is run and the rulers having the vision and a lot of different things that have happened in the past, which has enabled the UAE to kind of make a more kind of frictionless progress towards the end goal of, embracing blockchain technology and also being very kind of cautious and have a regulatory framework and regulations around crypto assets. So that's what happened. And I think in terms of central bank digital currencies, the UAE central bank and the Saudi central bank have publicly been known to be piloting a project on cross-country, cross-border payments using traditional local currencies and converting that into a digital version. And it's still in the very early stages, but I think eventually once the actual technology that underpins a central bank digital currency is developed enough to kind of weed out the problems and the risks that come with it, then over time, I believe, you'll see countries that transact in central bank digital currencies and it will coexist with the traditional currencies. And onto the point of when Todd was talking, or when you were talking about China and being a competition to the US dollar as a Federal Reserve currency, yes, China is the biggest kind of threat, or if you like, competition to the US dollar being a Federal Reserve currency. But that stems from the economic reality and the economic performance of those two economies. China is booming and is embracing technology, and the US is slowing down and is having a huge amount of debt, which the Chinese are actually buying. So the first competition is China as an economy and the Chinese yuan displacing the US dollar. But then there's also the issue of people that are existing or previously interacted with the financial system, the traditional financial system, using traditional fiat currencies, and now shifting over and putting those resources into a cryptocurrency, which is mainly Bitcoin, which is the biggest market cap cryptocurrency. And now that money is flowing out of the economy. So they have less kind of control on the economy. And as a central bank, you don't want leakage of, of resources and funds. And central bank digital currency would really actually make a central banker's job much easier, because it's a distributed ledger, which actually has live data on transactions that are happening using a central bank digital currency. So there's a lot of things that the US needs to figure out in terms of regulation. And I agree with Todd on the challenges and the issues, but luckily in the UAE, it's not a democracy, it's a benevolent dictatorship. So if the rulers of the country decide they want to do something or change a law to embrace the technology, they can do it far quicker and far easier and with less kind of apprehension from the general public. So, it's great that we have that form of government, and we're lucky that the rulers of the country are forthcoming and open-minded and embracing of technologies.
Are there any particular cryptocurrencies that are preferred or more embraced in UAE over others? And if so, why?
I think namely Bitcoin, because it's the biggest cap cryptocurrency, and then the stable coins like USDT or USDC, because it's a digital version of a dollar. Yes, it's not been issued by a central bank, but it's been issued by an entity that's, especially with USDC, that's gone through the regulatory requirements in the process of issuing a digital dollar in terms of these stable coins. So those two are the most kind of preferred cryptocurrency, or the most kind of exchanged and used here. But that's the case, I think, globally as well.
Interesting point about stablecoins. On the one hand, they have the advantage of being seen as having a currency backing and therefore acting as a traditional currency. But on the other hand, isn't the whole point of cryptocurrency to bypass the inflationary pressures of the regular currency, and it isn't being linked to a particular currency that's already suffering from these pressures defeats the purpose? Doesn't it defeat the purpose?
Yeah, but I mean, the use of stable coins is mainly to make it easier for people to have crypto exposure and then go back to a traditional currency exposure where the value is not fluctuating. So if you want to actually speculate on cryptocurrencies or a crypto asset, then there's Bitcoin, there's Ethereum, there's so many other cryptocurrencies out there. But once you've taken a profit or you decided to exit the position, then you can go back into a stable coin far easily and far quicker than you would if you wanted to switch over to fiat currency, because you have to go through the banking system, which is not extremely efficient and takes longer for transactions to actually confirm with a bank than it would be on a blockchain network. So that then when you are holding a stable coin or US dollar, and if you then decide, okay, I want to now again have crypto exposure, you don't have to go through the lengthy process and you can get that crypto exposure again pretty quickly. So it's a tool, but it's not a crypto asset as such. It's not a cryptocurrency. It's a central bank digital currency or a fiat currency that's in digital format and pegged to a fiat currency.
Okay, that's fair enough.
And I'd also kind of wish to expand and totally agree with Saeed, is that the fact of digital currencies being used with the SWIFT system. There's been some news related to our antiquated SWIFT system that began in the 70s, and the idea of kind of upgrading it to use digital currencies. That's something that is being discussed as well. I don't agree with that approach. I think the SWIFT system has seen its better days. It's inefficient. It's in my opinion, it's slow. It's cost prohibitive. And why put a new layer on an old system? And that is another use case for digital currencies, which has to be discussed as well, that I would add to Mr. Aldarmaki's statement.
Speaking of SWIFT, one of the recent complications from the perspective of regulators has been the fact that while the US is struggling to balance de-SWIFting certain actors and putting financial pressure on them, on the one hand, the entire system is coming under pressure from China and others, and on the other hand, cryptocurrency is being used to go around sanctions. How do you see that working out in the long term, and are there any solutions for achieving these financial goals without also essentially turning the entire system into one giant black market?
You know what? It's interesting that you raised the question. Let me take you back to on or about 2014 to 15. I had the opportunity to represent on more of a consulting agreement, a company called Bitcoin. And they were once upon a time one of the second, they came out in 2012. They actually followed Bitcoin, and they had a privacy ring signature, and they were beginning to be used for things such as illicit things. And to get to the point of your question, internationally, this was a German-based company, and what I can tell you is that I think you're going to see a rise in the organization working with many governments called Interpol. And to digress in my point, what Interpol was actually going to do with regard to Bitcoin is they were going to seize their domain. That's what the government wanted to do, but they ceased and desisted in the request of Interpol, so that did not end up happening. But you're going to see Interpol playing a greater role in the world space with regard to using digital currencies in doing the policing. And I think that that has a chance to kind of be the great equalizer in some of the bad acting that we are capturing in the mediums that we watch with regard to digital currency, and trustfully provides more consumer confidence once this organization kind of advances what they seek to do, among other agencies there too as well.
Well, the world has seen a great deal of challenge in international investigations of cybercrimes in particular, and another challenge that has been noted is the abuse of the Interpol system, the red notice system, that can be even further abused by competitors against their rivals, accusing them of digital crimes and cyber crimes related to digital currency as a way to chill their financial activity. I wonder what safeguards are going to develop to address this issue that certainly remains to be seen. Speaking of international contacts, going back to Mr. Aldarmaki, I wanted to discuss his experiences of working in many international contexts with vastly different regulatory systems, from UAE to the US to other Middle Eastern countries, Africa and Latin America. If you could just give us a bit of an overview of what how these different frameworks challenged operating in those countries as banks, investors, and so forth. And what do you see? Are there any particular trends do you see in the directions of these frameworks?
Yeah, that's a great question, and I think it's a very valid point, and it pertains to blockchain and cryptocurrencies, because all of a sudden there's no borders between financial transactions happening, and there's no controls in place, especially if it's when it comes to interacting with. I know Todd mentioned Litecoin, but there's another cryptocurrency called Monero, which has a privacy kind of element to it, and it's difficult to kind of trace transactions and so on. But onto that point, I think you mentioned Interpol, Todd, and you mentioned kind of authorities that want to have a good monitoring of transactions, and actually these entities are using tools that you can use on a blockchain network, which is analyzing the chain of transactions. And that's a way to kind of assess if there is money that's being illicitly and so on, and that technology is developing. It covers mostly the established cryptocurrencies like Bitcoin and Ethereum and USDT and USDC and the biggest kind of digital currencies. But there are other digital currencies that kind of that analysis doesn't work on, and you can't really verify the source of funds on chain. In terms of the different kind of jurisdictions and the different kind of entities that in the past 5 years I've had to interact with or do business with, ultimately you have to kind of look at where that entity is legally structured and where it's operating and where it's offering its product and service. And as long as you are making an effort to kind of follow those regulations that are within those jurisdictions, and as long as you're dealing with a centralized entity, then you can kind of adhere to the regulations within that jurisdiction where your company is interacting or operating, and the other entity you're dealing with is interacting with you or operating from. So there's you have to kind of be aware of the different frameworks in place in the different jurisdictions and kind of take that into account. But I think the trend is now to kind of be more embracing of blockchain technology and cryptocurrencies and kind of being less conservative. But obviously there is still a lot of discussions that are yet to be had between regulators and people that are participating in these markets, whether it's customers or people or retail, or whether it's corporations or companies or startups. These kind of conversations need to happen to make sure that there is a global kind of accepted standard or regulation in place when it comes to digital assets. But it's very difficult and very complicated to achieve, and it's going to take, I think, many years before there is a kind of universally accepted set of laws and regulations around being a participant in the crypto assets market space. But it's evolving and it's improving with time, and I think there are more and more jurisdictions which have made a clear effort in regulating crypto assets, and that will continue to happen.
I'd also like to add just a editing note to my former remark. I know my voice is not very clear some days these days. It was Bytecoin, Bytcoin, and not Litecoin, just for the record.
Got it.
I don't want to keep the speakers for too long, but I do want to ask one last question each. Going back to Todd White, the question I wanted to ask you is about U.S. approach to countries that are actually radically at the forefront of cryptocurrency adaptation. We have seen a bit of a hoopla over El Salvador's approach in adopting cryptocurrency as an official currency while keeping the dollar as the main backer of its own currency. We have seen a lot of pushback from the US regulators. Why on earth do these people care about a small Central American country so much? And what was the outcome of this tension?
Yes, that's an excellent question. So as we know, back during the late fall, El Salvador adopted Bitcoin as their national currency per se. And behind the curtain, what was kind of going back and forth between the State Department, our diplomacy team, and the El Salvador government is the United States did not want this to happen. And for those who do not know, the United States annually gives on an average of $55 to $60 million in aid to El Salvador. And what the United States was threatening to do is to withdraw that subsidy, if you will, or that money if El Salvador were to adopt, therefore, Bitcoin to hence, kind of usurp the US dollar. So the El Salvador government went ahead with their plans, and I still think that they're behind the scenes. There is a conundrum here because think about the current valuation of Bitcoin and what it's going through here, and the pressures that it is putting on El Salvador. So we don't know who's going to win out, but certainly there's some very clear pressures that El Salvador is seeking to address, which therefore I don't think have fully unfolded yet.
Mm-hmm. And it sounds like the US regulators in that subject are adopting a very conservative approach, given that despite these market related challenges, this Bitcoin issue, it's an alternative, it's an optional alternative to its main currencies, and it's also not such an astronomical sum of investments that would really undermine the dollar, as opposed to multi-trillion dollar debt and China and so forth. So I'm really kind of mystified by this level of reaction.
Yes.
Now, coming back to Mr. Aldarmaki, one last question regarding the same issue of radical adaptations of cryptocurrency in developing countries. We've seen the Central African Republic follow suit this year after El Salvador took that action last year. Do you see any other countries following in adapting cryptocurrency as a national currency in the near future in some capacity? And if so, who and where would they be?
Sure. Yeah, I think Todd touched on an important point of what the U.S. kind of government was trying to do to make El Salvador not take the decision of making Bitcoin their, the local currency, if you like, or their reserve currency. And I'm sure that El Salvador weighed up the cost of their local currency losing value with high levels of inflation of their local currency, and they saw that what they would not lose from the value of their national currency compared to the cost or the aids that they would miss out on, and so on and so forth, far outweighed that. So that's why they made the decision to adopt Bitcoin as their national currency. But interestingly enough, if you assess the transactions that are happening in El Salvador right now, I think you'll find that maybe 10% of transactions, or I think it's closer to 7% of the actual transactions that are happening in El Salvador are happening in the traditional currency, and they're sorry, 7 to 10% is happening only on Bitcoin as a currency, and the rest is still in the national currency. So I think even with the adoption of a new kind of national currency, it takes time and it takes effort and it takes education and all of these things. And then, you know, I think that the US and the regulators in the US are taking an extremely conservative approach when they can probably loosen up a little bit, because if they look at the numbers and the market cap of digital currencies and cryptocurrencies, it's a tiny speck compared to the value of the US dollar kind of instruments that are out there, whether it's commodities or whether it's derivatives or public equity or private equity. And it's still got a long way to go before Bitcoin can be a threat, or cryptocurrencies can be a threat to the traditional financial system. So I think they're being very paranoid and they're being very cautious when the threat is nowhere near there yet. But if they can continue to be kind of trying to stifle innovation and trying to stifle technology, then their economy will suffer from that. And then eventually they won't be at a level where they can kind of control this asset, which is slowly and gradually gaining value over time, and then becomes a real threat at that point. So I think by being cautious now, it's harming their chance of, in the next 5 to 10 years, being on top of it and being in good control of the situation. So it'll be interesting to see how things pan out in the US. But yeah, I think there will be countries that embrace a cryptocurrency as a national currency, and the main driver for that is if they have hyperinflation or not. Like there's some countries where the level of inflation is just crazy and it doesn't make any sense at all to transact in that national currency. So they'll obviously be looking at alternatives.
Mm-hmm. I wonder if countries like Afghanistan, for instance, that might consider that measure. They've been having a significant inflationary issue, but that remains to be seen. Only a point about education, by the way, El Salvador did establish educational centers to educate the public. I think it would be wise for. I don't see the U.S. government doing something like that, but I do wish some private enterprises created such structures, because I think they're well worth investing into for the sake of long-term successes and prevention of people being either scammed or being so scared that they don't comprehend the value of innovation at all. But that's definitely, projects of that sort, I think, are very much the future of smoothing out some of these edges in regulatory challenges. And one can only hope that with time, some of these people can be brought on board as they see the value, and as these blockchain technology and cryptocurrency movements become more mainstream, more tethered to things that can keep them stable, and that can address the concerns of the general public as well as more conservative financial and other projects. So I'm sure we'll be talking about a lot more of these developments in the future, because the fight is not nearly over, whether in the US or international. I'd like to thank both of you for coming and joining. It was a tremendous honor and pleasure to discuss these issues, and they of course raise even more questions that I hope we'll be discussing in many future sessions, articles, and so forth.
I'm sure myself and Todd can talk for hours about these kind of topics, but thank you for giving us the opportunity to discuss openly and have the discussions. It's been really interesting to hear the views from Todd as well, and I hope the audience got some useful knowledge out of this.
I hope so. I am sure it will be of great value, because what I've observed and what inspired me to host this event is that most of the education on the subject that people who are not involved or not looking to be involved, they gain from the media, and journalists are not necessarily educated on this topic or fully informed or have a vested interest in providing accurate information, as opposed to capitalizing on sensational issues or sensational coverage of challenges and things like that. So I think just relying on media coverage of issues of that sort is not nearly sufficient to acquire real understanding and decision making on this front. So bringing in experts in the subject, I hope, will help bridge the gap in understanding and coming to the right decision for each individual person.
Well, thank you. And I'd like to just motion with Saeed cited, and I agree with you that I think it takes a composite of people coming together and learning from each other at various levels, government, international governments, and that's the way it's supposed to work and evolve. So it was certainly a pleasure to be another thought and voice on your platform, and join Saeed in this format. And it was very well posited from the standpoint of questions. So thank you.
Thank you so much. Much appreciated. For those watching us, the Washington Outsider covers topics that are either overlooked in the media or are insufficiently covered. We look for to present different voices to the public and to diversify the understanding of global issues. Please stay tuned for our future events on cryptocurrency, as well as many other topics. Thank you very much.
Thank you.
Thank you.